Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. I hope around everyone I got hit with one of those old Microsoft auto updates. We're going to take your computer hostage and not give it back for a long time. So I hope everyone has the show on this morning. If not, let us know in the chat. But I'm Spencer Israel, Joel Elconin, and Dennis Dick. Got a show for you again today, folks. Earnings again. Netflix, Goldman Sachs are the two bigger ones on my radar, but we got a lot to discuss. We got two guests joining the show today. First up, Matthew Golden. He'll join the show at 8:15. He is just an independent trader. And then at 8:35, we're joined by Nick Chahine, our options guru. Joel, what is doing this morning in the S&Ps?
Oh, everything is fine, Rosie. We're up 15 handles at 26.96.75. Getting ready to break into the 2,700 handle. Pre-market low, that was made early at 78.75, a couple points above the close. Just at the pre-market high right now, as we speak, 97 even, folks. I look for us to climb into the 27 handle today. Perhaps 27.1250. That was an old double bottom. Before we broke down, looking at the crude oil market, crude kind of quiet session so far. That is trading in the green by only 4 cents. A big support here in crude at $66. Couple lows there, so keep an eye on 66 in crude. Gold in the red by $5.80. Gold still struggling with that 1350 level. Silver in the red as well by 4 cents at 1664. And looking at your Bitcoin futures, the 2-day rally is pausing here, folks. This is an interesting chart, just holding at 8,000, but not really able to climb into the upper $8,500 area. All right, we're a little bit off this morning, Dennis, but you're not. You're been trading since late last night. How are things looking out there?
Well, no updates, no Microsoft Windows updates for me, thank goodness. So my computers are running fine here this morning, and everything is looking up. And it was a little bit of an everything rally yesterday. You had a lot of stocks that have been lagging, taking off, and we're seeing that here again this morning. It's a little bit of everything. Crude stocks lagging, because crude is trading down just slightly here in the pre-market. But really here, we're seeing a rally across the board. Even some of the defensive names catching some upgrades here this morning, pushing those stocks higher as well. The big mover and the big catalyst for your rally here is Netflix. It is trading up 21 points here in the pre-market. They reported earnings after the bell, and it wasn't so much the earnings, but it was those metrics, Spencer, that came out a couple minutes later after the initial headline numbers. Give us the details on NFLX.
Right, so I'll give you the earnings first. The Q1 GAAP EPS was 64 cents. The sales number, $3.701 billion versus $3.69 billion estimate. The Q2, oops, I hear myself a little bit. Let's see if we can. No, we're good. Okay. Netflix Q2 sales guidance, 3.9 billion versus 3.89 billion. EPS guidance coming in higher as well, 79 versus 65 cents per share. But you're right, it is all about the net streaming edition, 7.41 million versus 6.43 million for the quarter. That was the estimate. 7.41 was the actual, 6.43 was the estimate. So they came in higher on both U.S. and international streaming editions. Looks like the Q4 was not a fluke, and they are flying at speed.
I mean, the product is excellent. I use Netflix almost every evening. They just have that new show that just came out. Have you watched this one, Joel or Spencer? Ozark with Jason Bateman?
It's been on my watch list since it came out.
Holy cow, is that a good show? And that's one of those Netflix originals too. I mean, we're like 5 episodes in right now, and I am like, wow, there is so much going on. There's so much action in that show. I think it's one of their best ones yet. Like House of Cards, I was always a huge fan of. Obviously, we're losing Kevin Spacey, which is disappointing. But I tell you, this Ozark is a close second because this show is excellent. So, Joel, put that on your
Ozark?
bucket list. Ozark. It's good, man.
What about, and I think it was on Netflix, Dana recommended, is it called The Good Side or something like that? The Good World?
The Good Wife? No.
No. I think it's called The Good Side. Dana knows it. Is Dana in? The other Dana?
No.
I don't know. About someone that they die and they were supposed to go to hell, but they went to heaven.
Don't know it. But I just recently watched Stranger Things, which has, if you remember from when Packer's been on our show, Michael Packer always says Netflix doesn't own most of their shows, but they do own Stranger Things. I only watched that like a month ago, and so I'm all into that now. But
all I know is that they can keep producing content like they're producing, and maybe they're not actually the ones that own it, but man, it says a Netflix original when you start it, and so everybody thinks that Netflix, is the one that owns it, and I don't even care if they got shows like that are coming on. That's the place I watch it. I'll continue to watch Netflix. Now, that being said, it's always been above valuation. This is why I do not own the stock in my investment portfolio, because I can't justify the valuation, so it just doesn't fit my description. But, props to everyone who's owned this all the way up. It's a great product, and the stock has been a great stock.
All right, I'm just going to talk about the price action because that's all anybody cares about. As the snow comes pouring down here in the Motor City, this is unbelievable. Spencer, can we turn the camera around so we show people?
Yeah, this is crazy.
Oh my gosh. Pre-market high made it on the headline number. You went up all the way to 333.21. So that is your bogey on the upside if you're not happy with covering at 330. You did have a dip in the after hours at 322.45. So those are your early numbers. Just bunching up here at 330, psychological level, trading some nice volume here. Let's go to the daily charts and see what we can see from the daily charts. Daily charts, all-time high, 333.98. There it is. There's your bogey.
That's your bogey. I think it challenges it. It's a matter of whether it takes it out. So that's your bogey. You do have a lot of people who are probably going to, say, okay, well, all-time high test is a huge test, especially when you got to open this much up to get to it. So I think we're going to test it. It's going to be a matter of whether we can take it out or not.
I'm not going to bet against you on this one, Dennis.
How do you bet against the stock? I mean, and Uncle Carl was the one who was all over this, and he bought this back in 2012 when the stock went into the doldrums. Remember, and this was before it split, so I think it went up to like $300, and it came back down to like $50, which on the 5 for 1 or whatever how they split, is like $7 or $8. He bought this thing right at the lows in 2012, 2013, and unbelievable. He sold it obviously a long time ago, on the way up, but it was a great trade for him. I wish I would have put this one in the investment portfolio and forgot about it. Obviously, everybody does. Hindsight capital always wins, but this has been an unbelievable performer. Just unreal. But I just want to say again, it's this valuation for me. That's why I can't bring myself to put this in because it doesn't fit my bill.
And we'll get Nick on it 8:35, and he went crazy stupid lotto with these. He paid I think he went to 320s for a lotto, and he had to pay a lot of money, which is rare for him, but he was just feeling his oats. So we'll see. We'll talk about his setup when he comes on the show here at 8:35. Someone wanted to ask here about Roku and how it trades or does not trade with Netflix. You want to take a look at the Roku chart?
Well, it's coming up here this morning. I don't know if there's other news or if this is just trading off of the piggybacking Netflix here. But it's up 8%, which makes me think that there might be some Roku news on its own there too. Spencer,
there's a couple. Well, there's a couple headlines. There's one from yesterday after the bell. They announced that ESPN's new over-the-top streaming package is going to be on Roku. It's ESPN Plus. That only debuted last week. So there is that news from yesterday after the bell. It'll be on Roku devices, ESPN Plus. And this morning we have a 5.1% passive stake by 0.72, which is Stephen A. Cohen's.
That's big.
So fun.
Yeah.
So those are the two headlines on Roku.
And you've also got Needham. I just glanced over a Needham note here from this morning, and they are saying just a headline of it. If you like Netflix, buy Roku. And they're citing valuation in that note. So they like Roku for the off a Netflix play as well. So our chat is correct. At least that's what Needham says. They agree with you, chat. It's come off. Roku's come off the highs a long ways here. So here you are. You're getting a stock. You're getting a breakout over the 35. So I think you get the stock on pullbacks here. I think it's to be bought. And, that's pretty much everything for the market here now. I just look at this market, and we've been talking about it's been a slow climb. It's given you lots of chances. There's been lots of headlines that have pulled the market back. But really, if you've been buying the dips here in the last couple of weeks, pretty much on everything, you're happy about that.
Pre-market high 36.87 here. Some decent volume trading. Now, I'm not sure if it was someone out of the Google chat or the pre-market chat but talking about this stock for a while, and I think there was a lockup period, right? And it came. There was a big downgrade. I don't know who did it, and then there was some stock coming to market, and people are going to sell into that. So there was a sustained sell-off here. Made a single bottom there at 29. I mean, do you want to figure out a retracement here from this move from 57.25 down to 29? What's that? 28, 14, 43, 44. I could easily see this.
Look at that air math. He's fast, man. You are one of the quickest with your air math. He's already figured 43, 44. He's got that 50% fib number figured out right in his head.
Does anybody ever check to see if I'm right, though?
I just take you. I didn't even try. So
well, you can look at it too, to see, looking at it at the chart. But yeah, nice move here. Netflix lighting a fire here under shares of Roku.
Jump over to the other earnings from this morning, and then we got some big ones here. Let's go to Goldman Sachs here this morning. Trading up 2 points in the pre-market off of their earnings. And Spencer, how did GS do?
$6.95 EPS versus a $5.58 estimate sales.
Wow, they make money.
Yeah, right. $10.04 billion versus $8.74 billion on the sales. So beats on both. They're raising their quarterly dividend from 75 cents to 80 cents per share.
I mean, the money that Goldman makes here, it's hard to bet against the stock. And it's been in such a long consolidation, too. You just look at the monthly charts and, the banks really haven't gone anywhere really for the last year. They really didn't participate much. I mean, back in the beginning of 2017, we were $247. Well, we're 257 now. So we're up 10 points in the last year and 3 months. So really, Goldman's gone nowhere here. This report is good, but you know what? They just don't seem to be buying the banks off of the good earnings. Bank of America was the same story yesterday. We talked about in the pre-market. It popped, and then it dropped. And then, I thought it might pop back, and it has popped back. But, you look JP Morgan, you look Citigroup, all these banks are making a lot of money here. They got the rising interest rate environment going for them too. But for some reason, just can't seem to catch a bid.
Do you think it's like maybe some program or algorithmic trading that, has a system, when you're buying the stock and exiting on earnings and then resetting the program? Because, I mean, it happened in JP Morgan, happened to Wells Fargo, Bank of America.
I think they just all follow suit. I mean, I noticed that after the first one, and then I'm prone to do the same thing. Like I see them pop on the earnings, and I'm like, well, everyone else sold off on it, so why not? So it's kind of a little bit of a herd mentality.
All right, double top at 263 here in pre-market trading, struggling or at the 260 level. So 263 is a bogey on the upside if you're looking for more follow through in Goldman Sachs. Let's go to your daily charts. And what do you have? You have your 2-day high at 262.50. After that, folks, it really opens up, but resistance right now stands at 262.5 to 263. Boy, coming back on the downside. If this acts anything like Bank America or the other banks, maybe you'll get a chance to get it on change today, but I don't think so.
Good report. Eventually, they gotta buy these, don't they? And you know what? And I look at a lot of the banks, and I don't own hardly. You know why I don't own the banks in my investment portfolio? And the valuations are good. So you would say, why don't you own all these banks in your investment portfolio? But you know why? Ask me why.
Because you own a lot of Canadian banks.
No, because I went through the financial crisis and I watched these stocks go and I got burned bad. I mean, I had Citigroup. I didn't even have a lot of banks during the financial crisis, but everything burned and, blew up in the financial crisis. I had Citigroup long. I had Bank of America long. And I think I had some Morgan Stanley too. So I had 3 of them, and then that, you're diversified. You had to have some banks in your investment portfolio. Well, I watched my Citigroup go from $70 a share down to basically $1. I watched, Bank of America go from $50 a share down to $3. I watched Morgan Stanley go from $70 or $80 at the highs down to $5 or something like that. So I got burned so bad during the financial crisis. Can you still hear me? I'm just saying internet problem.
Yeah, we had a little bit of a glitch.
But it's so bad during the financial crisis that it's like once bitten, twice shy. I've just never really, and I've played these. I trade these things all the time. So, I trade Bank of America almost every single day. I day trade Citigroup almost every single day. I day trade Goldman Sachs probably at least 2 or 3 times a week. But as investments, I'm just so, it was so eye-opening to watch them do that. And I just think that I just can't bring myself to put them back in my invest portfolio. So I've watched them go all the way back up, except Citigroup. It's obviously never came back. You can say it's $70, but we had the 10-for-1 reverse split. So really it's $7. But I just haven't been able to do it. And the other thing is the point you made too, is I do own a lot of the Canadian banks. So I do have financial exposure that way. And I feel like the Canadian banks were always safer. But now if you look at them, the Canadian banks relative to the US are way more expensive. The book value, a lot of these are trading at book, or some of them even below book, where you go to the Canadian ones and there's some of them trading 2 times book. So from a valuation perspective, the banks are still attractive. Just for whatever reason, I can't get over the financial crisis when I watched them all burn.
Yeah, I didn't have anything in my portfolio during the financial crisis.
Well, that's good.
But I added Goldman and Morgan, and then this one I wish I would have held on. And I talked to you about this one, Monroe Bank and Trust from my old hometown. Boy, I got a little bit too big in that, and that probably was a reason why I didn't hold on it as too long. When stocks hang out at $1 for as long as this one did, you get a
similar on that one.
Yeah, it went. And I held it. It's at 1080 now, but I was buying
What's the symbol?
MBTF.
I've never traded that one, Joel. So it's come all the way back. You still got it?
No, I don't. It was under back. 2 and then under $1 for so long. I got nervous. That's when I wish I would have held on to. But let's see. We got the Goldman earnings, and who else reported today?
Johnson. Let's go to the Dow component here. J&J is trading up in the pre-market. Spencer, details on J&J.
The New Brunswick, New Jersey company, Q1 adjusted EPS $2.06 versus a $2.01 estimate. Sales of $20 billion versus $19.4 billion estimate. So again, beats on both of those numbers. They also reaffirmed their fiscal year EPS guidance, and they raised their sales guidance for the fiscal year by about $1 billion. A
lot of these defensive stocks are starting to turn and come back into favor there, and they've been out of favor for a long time, but they're turning with the overall market. And I was gonna make a note, and we missed our 8:15 guest, by the way. So
it's okay. I actually rescheduled him. It's okay.
We were talking too long.
No, I shot him an email like 8:05. I just said today's been a weird day with my.
We've had Microsoft Windows updates are murking us.
Exactly.
But it's coming back. There's an open here to 135. I think if you get up to J&J and get over 135, it's going to be tough. So as you go to 133, 134, I just don't know the upside is better than the downside. So at a certain point in time here, risk reward doesn't make sense for J&J, at least from a trading perspective, because I think 135 could put a lid on it.
What exit is New Brunswick?
It's 9 off the Turnpike, and the Parkway. They don't really have a Parkway, so it's like 11 to the Turnpike, to 11 from the Parkway to the Turnpike, and then 9 off the Turnpike. Nine, or you could do.
That's what I thought.
You could do 10, I suppose, but it's mostly 9.
Sometimes I do 9.5, and maybe you'll split it.
There is no 9. What? There's no 9.5. Come on.
All right. Pre-market high 133.75, and you hit that twice, 133.74. So that's your area of minor resistance, trading up $1.24. Let's look at the daily chart. Man, this is coming out. Dennis is trying to give you the only resistance that's in there. See a double top at the 134.40 area. And then Dennis is talking about that nice top there above 135 and 135.70. Once again, I don't know if I'll be as quick on the air math, 148. Let's make it easy. To 122, that's 26.13. Boom, or that takes you to 135. So a lot of confluence here at 135. Let's see if it can hit it today. Before we move on too much, Jazz asked us just our thoughts on TD because we were talking about the banks. So
yeah,
Foreman.
We can go to the Canadian banks.
Look up. I mean, there's support here. Support is support until it's broken. I just be a little worried because it's been hanging out down here so long.
Well, and one thing you have to consider here, it's always good to look at the Canadian stocks on Canadian chart because you have currency that's moving around the U.S. price. So it will look different on a Canadian chart than it does in the US. It'll look similar, but obviously it's got to adjust Canadian dollar versus US dollar. And if you look, the fall's a little steeper there in Canada, but the charts are very similar because the Canadian US dollar has been somewhat stable. I mean, we've moved around 3 or 4% in the last 6 months, but it's not a lot to really throw the charts up. But if the Canadian dollar starts to get some volatility, always make sure if you're buying a Canadian chart, look on a Canadian, basis. Don't just look on the U.S. basis. TD is one of the cheaper ones. It's one of the more. I like TD. I like the stock. I think long term, multiples trading around 13 times earnings. I don't know if you can really go wrong. 3.84% dividend here too, which is on the Canadian side of it, which is somewhat attractive. I don't own TD in my investment portfolio. I do own CIBC, which is CM over here. I do own Bank of Montreal, which is BMO. I do own a lot of Canadian ETFs, which have a lot of banks in them. So I have a lot of exposure still to the Canadian banks. The risk involved in the Canadian banks owning them is the housing bubble in Canada. I mean, we have, crazy prices in Toronto, crazy prices in Vancouver. We're even starting to get crazy prices in Windsor, where I'm from. So you do have a little bit of risk in that way, but the Canadian banks have always been somewhat conservative with their lending. The only thing is if, obviously, we had a housing crisis come in where prices started to go down substantially, or interest rates started to, climb and people start losing their homes, then, there could be an issue. So that would be the major risk I see potential for the banks, but that risk has been on the table for years. And this bubble just keeps inflating. So if you've been staying on the sidelines, you haven't participated in the bank rally for the last 3 or 4 years, which, the banks have pretty much, went not straight up, but they went up significantly since then. I mean, TD 4 years ago was $50. It's now 70. But again, Canadian stocks have not performed quite as well as US stocks. And that's why I've been slowly kind of nibbling in to some Canadian stocks, because I think, money does rotate over long periods of time. And Canadian markets have underperformed, mainly due to oil.
You know what? We got to get Rob on the show. Former trader and very involved in the market. I'm actually going to ping him today, see if we can get him on this week. The other question, Dennis. So when you look at Canadian stocks in the Canadian, I mean, is that just on your BMO platform or?
No, you can go. You know what? You can go to like big charts, and if you want to see free way to do it. But big charts if you want. If you just want to like the Canadian chart. I obviously have it on my BMO platform too, but if you're just looking for a place, you go CA:, and then you type in the Canadian ticker symbol, and you can do it right there. So there's lots of different places to do it.
Forgot about old big charts.
Yeah, I still use. They're nice, clean charts. So, and it's free. So props, hey, look, free advertising for big charts here. But when I want just want to bring it up quickly, just bring up a browser, go bigcharts.com, and then just type CA:, and type the Canadian ticker symbol, and it'll show you a Canadian chart.
All right, now we haven't had this happen in a long time, but a stock is being added to the S&P 400, and that's FIVE. That's trading up 58 cents here, making a new all-time high. Dennis, do you want to talk just briefly about the dynamics of when a stock's added and what money managers need to do or don't need to do?
This has been one of the toughest trades in the last 3 years. It used to be when a stock got added to the S&P, even a mid cap to the S&P 400, stock would pop 2, 3, 4%. And, if it got added to the S&P 500, a lot of times it pop 2, 3% because you got institutional money managers that have got to buy the stock, obviously, if they own the index. So, or if they're tracking the index, so they're going to buy it. For whatever reason, I'll tell you, when they get added lately, a lot of times it's crickets. They don't move nearly as much as they used to. I'm not sure. Maybe it's more efficient with the Arabs. I'm not sure what's happening in the background, but I'll tell you, 5 years ago when some got out of the S&P, everybody's scrambling to grab the offers. And it's just not the case anymore. People aren't scrambling to grab the offers when these things get added because they don't move like they used to. There was a Reuters article, and I think I was quoted in it, trying to figure out the dynamics of that, because there was, a paper published showing that the moves used to be between 3 and 5%, and the moves have been so light lately. So I'm not sure what the dynamics are behind that. That's causing that not to move up as much as they used to. Now, that being said, Five Below, and I didn't see the headline because I don't even really follow it anymore because there's not that much money, is trading up in the pre-market, but the overall market's trading up. But back in the day, when you saw a stock get added, it'd be up 3-4%. Five Below's up 0.76% here right now. So again, muted response to being added to what's the 400?
Yeah, S&P 400. And Dennis, you used to trade those exclusively, like when the Russell would rebalance or something.
Oh, yeah. There was trades on all of that. And it worked well. And and if any but the traders that used to do that, want to chime in on or tweet at me or even talk in the chat there. I mean, this was a strategy. This was one of our core strategies at Bright Trading, was buying the stocks going in, selling the stocks coming out, even on the rebalance days themselves, and trading those. And it's difficult now because even when they're coming in, usually they'd move up as they're going in and move down as they're going out. Sometimes they go the opposite way on you. So it's been a difficult trade to trade those. So I have not been trading them for the last 3 years because I got burned trading them the last couple of years, and I've laid off on that strategy. And that's what you do. I mean, no strategies, even these almost feels like arbitrage, so it seems like it should work. But no strategies always work. You've just got to be careful so you don't get burned. If the strategy stops working or becomes crowded. But for whatever reason, index, the rebalancing has not paid off. From an inefficiency perspective, like it used to.
Was the last time you traded it when you left your algo running and you were
don't even tell that story.
Can we tell? No,
yeah, you know what? I used to do a lot of algorithmic trading, and this is we're going to go on a tangent here.
Just tell the quick story because this is a good
one.
Well,
I could tell that story too, but one thing I always say, and I'm going to go on tangent of the tangent, is people will say, oh, you got to be trading algorithmically in this market. I hear that from so many traders out there. What are you doing? They look at me as a manual trader and they think I'm a dinosaur. I will tell you, I was running automation like crazy in 2001, 2002, 2003, and 2006, 2007. I had an account almost running fully automated. I had 2 accounts, one running automated, one not. So, I was like a high frequency trader, and my account would send like 5,000 orders, in a day. So I was doing envelopes, I was doing all kinds of different things over there. And in 2010, I shut it down, and people are like, why would you shut something like that down? You know why? It wasn't competing with the high frequency traders anymore. There's off exchange trading competing with, there's so many different things. So my market making programs just weren't making money anymore. So people will tell you, oh, you have to be algorithmic trading in this market. I'll say it had to be 10 years ago. And if you're trying to get into that game now, nearly impossible to compete, and we're not talking about institutional algorithms that are buying stocks or selling stocks and trying to reduce price impact. I'm talking about algorithms that are taking advantage of pricing inefficiencies. Those are all been monopolized by high frequency traders. And it's very difficult to write a program that is going to make money on a scalping basis in this market because those programs have all been perfected by companies like Virtu Financial, companies like Citadel, companies, like even your big banks. They've got, millions and millions of dollars of exposure. They've obviously got, a lot more connections than you do as well. So, they have those relationships with retail brokers as well, too. So it's very difficult, to, compete on, market making basis. So that's why I've kind of shut down most of my algorithmic trading. So funny, here we are in 2017, and I went back to old school trading, and that's how I've remained profitable because my automated trading wasn't making money anymore in 2010. So I moved back to manual, and you know what? As a human being, I can process and find inefficiencies. Almost not like find new inefficiencies faster than the programmers because if a high frequency trader's got to identify it and then program it in, if I identify a new inefficiency, I can trade it right away. So that's the difference. So that was a tangent of the tangent. The other story you wanted me to tell was when I was running the Russell rebalance. I used to run that automated too. And it was like 2000, maybe 2009, 2010, somewhere in there, maybe 2011. And I had it running. And I got filled on like 200 stocks.
And you were going out of town. You got to put.
And I was going away to the UK for the week. So this was the Friday afternoon at 3:45, 15 minutes before the market closed. And I had a vacation. My first vacation was going to take like 2 years to the UK. The next day, I was flying to the UK. Anyways, so my automation sends, a pile of orders. I get like 200 stocks in like 10 seconds, and I'm trying to trade out of them. And I'm like, I'm trying to get out of this. And I usually automate in and manual out. So I'm like trying to get out of all these stocks. I'm in, a ton of stocks. I'm trying to hedge the exposure, which I get hedged to a certain extent, but I have so many stocks. Anyway, so as I'm like selling stocks, I'm like, how do I own that stock? I already sold that stock. And I'm like, how do I own it again? And then I'm looking and I'm like, 3 minutes later, I realized the program is still running. And I minimized the program and I had it running in the background. So I didn't see it running, but it was still, throwing orders out and buying more stocks as I'm trying to get rid of stocks. So anyways,
so you were trading against yourself.
So I shut it off. I'm like, shut everything off, kill switch, pull the plug.
So you were trading against yourself.
He wasn't trading against himself. He was getting new positions.
I don't think I was trading with myself, but I was getting new stocks because it sends orders. It was finding more opportunities out there. So it's getting different stocks or it's getting different things. But anyway, so moral of the story is if you're running automated software, if you create automated software, never put a minimize button in there. Don't allow your software to minimize that you can't see it running in the background. It was like a mini night debacle for me.
You ended up okay though, right? I remember.
I ended up okay. Unbelievably, I lost some money. When you're running, and stuff and goes rogue, you can really lose some money. But I could have lost a ton of money. And I ended up only losing a few $1,000s. So it wasn't that bad, which is unbelievable because if you knew the amount of money that I was throwing out there, it's unbelievable. And I'm using prop money. So, it's a different story than retail. Like retail margin you out, but because I'm a prop trader, I'm using prop money. But anyways, it's unbelievable that I didn't really lose my shirt on that. So I learned the hard way that you don't minimize software in the background because I want more screen room, so I have it minimized. And I did not realize it was still running for 3 minutes. It ran and kept buying new stocks. There's 6,000 stocks out there. It can find a lot of opportunities for you. Some good, some not so good.
We haven't told that one in a while, so I wanted to bring that up.
I'm sorry.
I could laugh. It's kind of mean for me to laugh. I could just see you though, just like scrambling in there.
Full panic mode. So maybe that was the end of my automation.
Imbalances.
That was the beginning of the end of the automated trading career.
Imbalances. There's got to be just all buy imbalances, right?
Well, let's go take a look here. We're bringing up the imbalances here for you guys right now, and they are crickets in imbalance land. I don't see anything even of note. GE 127,000 to sell. GE just didn't even participate in the rally yesterday. GE's looking like just heavy again. Wells Fargo 79,000 to sell. That's interesting. Merck is 41,000 to buy. Merck is up here this morning because it is catching an upgrade from Morgan Stanley. So that's why it's trading higher. Man, they're small, Joel. I don't even see much of note. Cricket.
Dennis, are you in, out of, or looking at Bristol Myers long term? That had a
Somebody's asking me about BMY.
Yeah,
it's on my radar, but it's always been valuation with Bristol Myers for me too, because I can buy Merck, and if you look, I'm an old school, it's chart, chart financial analyst, CFA charter holder here, so I do crunch the numbers when I'm putting stuff in my investment portfolio there, and the reason Bristol Myers is the multiple is higher than the other ones. And that's why I've never owned. I don't think I've ever owned Bristol Myers in my investment portfolio, not for a long period of time, anyways. So I traded all the time, and I think there's a tradable area down here at 50. But as an investment, I've always liked Merck better, and I'm obviously getting spoiled here with the Merck rally as of late because it's one of the biggest biggest holdings in my investment portfolio. But it's just valuation. I like Merck. I like Pfizer. I think their valuation is more attractive than Bristol Myers. Although as BMY price keeps coming down, eventually valuation will be more attractive. I think you get in the lower 50s, and you can see that we bounced yesterday from 52.70. I think if it gets down in to the 50 area, it's interesting down there.
All right. It did get some news midday. Someone was nibbling at it. I don't know if it was DC1 or Jazz or somebody. They were nibbling at it and caught a little bit. All right. Are we gonna take a break here? Spencer's.
No, let's just bring Nick on.
We're just gonna bring Nick.
Yeah, we'll just call Nick up and I'll add him to this.
Spencer's helping me. Wave, Spencer. They're not getting to see you much today.
They're not going to see me, so that's okay. But
Spencer's a little stressed today because of this computer.
That's Microsoft, man.
Fine.
Those updates, when they update my PC, when they update my Skype, it's bad. I'm just not a fan of Microsoft updates.
Yeah.
Good morning.
Good morning. We are joined by Nick Chahine. He is the author of Create Income with Option Spreads. Joins us every Tuesday morning at 8:35 to give his fundamental and technical outlook on the markets. Nick, I'm a little worried about you, your risk parameters. You're going a little crazy on me. Tell me what happened. Tell us what you did in Netflix, why you did it, and what your exit plan is.
I bought Naked Calls as a lottery ticket for today's earnings. Basically, it was just, my opinion on short-term moves on the earnings headline. Short-term, it really is a complete gamble. You don't know what's going to happen. You can get smart about it and look at signs here and there. And then Netflix, I really looked at how it behaves on earnings in the last 4 or 5 of them. And it seems if there is a dip, it's only temporary. It eventually gives you a couple of times to exit without much damage. And if you held it through several weeks after that, then you recover your money and then some. So, the open interest showed some downside pressure, but it didn't show any resistance until 319. So I went ahead and bought the 320 calls for May. So this morning I should be making money on those, and if I will decide if I want to exit at that time. And usually I do exit, but I stay with the trade if I still like it. So I looked at it fundamentally, and it's still, I wasn't a believer, and not that to say that I'm all in. It's not a value trade by any means. It's a growth trade. And it used to be about global growth. That's the carrot. Well, the carrot is here. If I understand it correctly, global growth is going to be bigger than US based. So the story is here now.
Okay. All right. I just hope I'm not influencing you too much with, my little bit more risky behavior, but it was a well thought out trade there. And you might sell another option against it, right? You might not necessarily sell your position, but, maybe you get a juicy, 330 call, same month at the same price, and you could basically lock in your gain and play the decay on that, correct?
Actually, I could do it for this week. It depends on what premium they had. I thought about doing it yesterday. I had a 345 call to sell against the longs I bought, which would have brought me $3, I think, at the height of the day. So that would have lowered my entry cost for $3. And this morning I could have booked that. But I didn't do that. So regardless, I'm not going to, it's better than a sharp stick in the eye, let's put it that way. It was a lottery ticket, and it was a gamble for the short term, but I had somewhat confidence that I could get out of it without much damage.
And I can't feel my Facebook. Why didn't you sell a strangle? I know you were looking for a directional move. He wants to know why you didn't sell the strangle.
I would sell a strangle in a value stock. I don't mind owning for the long term. So if this were Apple, I probably would have sold a strangle. But I don't like the short stocks. That's number one. And when you sell a call, you have unlimited risk. And Netflix is not one to short. So I don't care how much of a buffer you put. They had priced in about $29 move before the earnings. But we've seen it move bigger than that. I mean, I've seen Google move 15, 18% on earnings. Same with Facebook. Why not Netflix? So I just didn't want to deal with that hassle. I would rather sell if I sold a strangle, I'd sell it, say, for September. So I can leave myself a huge buffer up and down. But I just didn't want the drama.
Okay. Instead,
nobody wants drama.
Yeah. Instead, he went with the 320 calls for less drama. Let's talk overall market here. S&P, but you've been talking about it. You had your lows, and then the street, started protecting it at 2,600, started protecting it at 26 and quarter, 26.30. Buyers keep having to step up to the plate. One thing I wanted to see was the volatility to come down. The 9-day average ranges, it's not as much fun to trade, but the volatility is coming down. We've got through all the headlines here. I have your S&P chart up here. Tell us, it's hard to give you some targets because I was looking at the charts last night, and we really swooned down from like 27.20. So I don't want to say there's another 20 handles on the bone here, but there's just not a lot of daily resistance to deal with today.
Well, you know me. You've tracked my coverage of this silly market, and I've had the two scenarios of 2016 versus 2615 versus 2715, and I actually put them in like that fuchsia colored zigzag lines, and the upside target played out. And I said the bottom was in on February 9th. And I believed it. And we only had a crisis of sentiment. That's it. We didn't have any fundamental threat. It was all yak and what people felt about it. And last week, or was it this week? I can't remember. Last week, we had a turning point in sentiment the other way around, where we had a confluence of bad news, and the bears couldn't keep one red tick. And in fact, the VIX closed red twice on red days last week, and not many people paid attention to that. So even the VIX futures, not just the VIX, because of options expiration day for itself on Wednesdays. So we had some good stuff happen, and we had some bad stuff not happen. In fact, on Friday night, my chat room lit up after the market closed saying, oh my gosh, Monday is going to be a bloodbath. And then I looked because of the Syria strikes. And then I looked at the events around it and I said, you know what? I don't think it's that bad.
I know.
And
because there was no retaliation.
It happened in a most perfect way because the president said one and done. Everybody else concurred. It was a 3-nation act and not the U.S. versus Syria. The Russian troops were out of the way, and there was no loss of life or major loss of, or definitely no civilian loss of life. It was just basically, hey, we did what we said we were going to do, as opposed to Obama when he drew a line in the sand and Putin, I'm not going to say it, but he made fun of him. In this case, that didn't happen. So the U.S. in this case has muscles and it's wearing a tank top basically on the global front. And it's a good thing for the U.S. in my opinion. And the strikes happen in the best way possible.
And also, I think that they're getting smart. They didn't do it while the SPOOs were open. Because there's a knee jerk, the algos will pick it up and hit it. And they did it. There was rumors during the week. Don't get mad at me with my conspiracy theories, but, they did it on the Friday night after the SPOOs were closed. The only thing you could trade was Bitcoin. And, it was a reaction, and you've seen the follow through.
They gave us 3 days to chew on it.
Exactly.
And the more news came out about it, there was actually nothing to panic over.
You're pretty good. You watch the VIX a lot intraday, and you also watch it on a daily. My VIX is, my heart watching the S&Ps. So just talk about, I got your chart up here of the VIX. Tell us how you look at it, how you interpret it, and how you use it on an intraday basis.
Actually, I don't use the VIX on an intraday basis because it moves strangely. What I use is the VIX futures, which on my platform is VX. It's a better gauge, and I definitely use that just to see only during periods of time where it's elevated, because fear drives actual the trades over fundamentals at times, and so it's nothing that drives my trades. It's how I manage my open risk to see if I need to defend it or not. But in all, this has been a crisis of sentiment / fear. So I've said that on your show before and everywhere, without this headline risk that we have, these negative headlines that are flying out, the bear thesis fundamentally is very thin.
Nick, let's jump over to individual stocks here. Once again, obviously, we already talked Netflix. That was the big report here from this morning. But, what are your thoughts here on, the tech stocks and we could go to the FANG if you want to, but I look at Amazon here. It's kind of just consolidation station right now. Netflix has obviously taken off because of the earnings report. Google's kind of been in consolidation station, banging its head up against 1050 here a couple of times. Facebook kind of in consolidation station too. What do you make of the pause here in the FANG stocks, and is that pause going to resolve itself higher or lower in your opinion?
If I were to bet, I'd go higher. Because this is the FANG gang I just posted in the chat room. So Netflix laid out a good example. Hopefully, it can retain its greens this morning. And if you look at all the FANG stocks, and none of them are overvalued from a PE perspective. So are they going to all deliver really bad quarters? That's the only way they're going to fall, in my opinion. The banks laid out the worst case scenario. I think Goldman Sachs and Morgan Stanley this week have a chance to flip that, where they delivered good reports, but the traders hung on to one thing. But with the banks, there's a common thread. Apparently, they wanted to see the trading desks. I don't think there's that common thread in the tech world. So they just want to know, as long as they don't clobber guidance, they're going to be okay. So maybe Facebook has the most exposure by them saying, "Oh, we're going to spend billions to combat this silly." Which, by the way, we can have a whole show about what the heck is the government trying to, or the people trying to do with Facebook. So, but sidetrack. I'm not going to go there. So, the FANG gang, I would be comfortable holding longs, and I am holding longs. I'm profitable longs, as you know, in Apple. I may get out before the earnings. I don't know. It's a big win. I'm long Amazon. It's not a big win yet, but I'm comfortable. It's June debit call spread, so I'm just going to sit in it. I may sell some puts against them or with them. I'm not sure. So I'm comfortable long into the earnings. Whether I get out or book some ahead of the earnings, I'm not sure.
Couple stocks coming out of the chat here. JBHT J. wants to know about, they had earnings there yesterday, I believe it was, if my memory serves me correctly. And the stock did have a nice lift. Yeah, had a nice candle, bumped up big time there. It is lifting a little bit here again this morning with the overall market is up another buck. Thoughts on the transport stock JB Hunt?
What's it at though right now?
It's really wise, 120.88. But it's bid 119.50 all the way up to 121.94, so it's 2 points wide here in the pre-market. But yeah, so it's up another buck at 120.88.
So above 122, it seems to run out of air. So I'm going to draw a box. So if I'm long, I may stay long in it just to see what happens this time around 122. But other than that, I can't jump on board right here because of what they delivered. I don't know what they said. I thought I remembered they had a headline of sorts. But if they have a catalyst fundamentally, then yes, I can chase it. But from a technical perspective, it has been difficult for it above 122. So too many candles, too many wicks left up their tails, or whatever you want to call them.
Okay. We'll try to do 30 seconds stock here because they're now littering. They're littering. They like it when you go to ticker time, Nick. So they're littering up some tickers here. Bullford Trading wants to know about SCHW. I talked on the show yesterday. I thought it might be one that gives it back. It did not. Tried to play from the short side, didn't work, so I covered. How do you know when something's not working? You start losing money on it.
Okay, so 53-ish. Is it up above 53 this morning?
No trades. Well, odd lot of 53.50. I mean, overall market's up, so it's probably going to open up.
Okay, so 53.50 is good news for it. It has been the last couple of times where it's failed. So if I'm long it, I'm staying along it. There's no reason to exit. I definitely would not short it.
ON. This is the semiconductor stock.
Semi.
Trading. Yeah, this one just had a couple trades go off, $1.50 lower, but those are only just a couple trades. I don't know if that's got news on it, if that was just a one-off there, but ON closed at 25.05.
Okay, so the good news on ON is that longer term, over a period of months, it has had higher lows. But it's awfully zigzaggy, so I'm not sure what's going on with this fundamentals. There's a headline risk going off and on it, so don't know why you would trade $1 some lower. That's a big move. So it just depends on if you know the fundamentals or not. It could meander up to 26 and above, but I don't know the fundamentals. Higher lows are good.
WDFC, Jazz wants to know about that. Just broke out. That's obviously your WD-40 company.
Yeah.
I have a jar of that in my garage. I use that stuff when I got a squeak, so still works years later.
Believe it or not, I spoke about it last week. I had a debate with it in the chat room, and there's no reason to short this company long term. I mean, if you're long, you stay long, and you pick your entry point. Whoops, I think I posted it. You pick your entry points, and the weekly chart is very constructive. It's at highs, so unless you know something's going to change its future, just pick your entry points correctly. Whether this one is or not, it depends on how you see the company. I don't like chase.
Moving over to Lamb Research, LRCX, that reports here after the bell tonight, so you are going to have a fundamental catalyst. People are buying it ahead of the report. It is up $3 here this morning, trading 206.60.
Lamb Research, an old customer of mine from eons ago. It is a well-managed company. They will get the mention from Kramer. He loves that company, so he will support your stock if you're long it. Losing 190 would be very, very bad technically, but it is closer to the lower end of its trading range. So if I'm long it into the earnings, I'm not that worried if I'm in it for the long haul.
Looking at Transocean Rig, and also we'll do these two together because they're oil stocks, ESV, and both those stocks have been moving.
Well, Rig, I'm long. I had a huge home run in it. Somebody brought it to my attention. I can't remember who, so I bought it blindly. I looked at the chart. I was like, you know what? I'm going to buy it. And so I do have
to be good to be lucky.
So I booked all my profits, and then I looked at the chart and I saw, you know what? There's a weekly breakout coming, and if you look at the weekly chart, it's even more attractive for that giant cup and handle, and also a lower high trend line that's going to be breaking. So I bought complete lottery ticket there, and I'm just in it with house money. So I'm not going to look at it for another day or two.
That's a good way to go. Qualcomm, value trap or not?
I don't.
Trap.
I
It's trapped me so much here, Nick. I'm down 7 points in it now and choking on it. So I'm calling it a trap.
Well, the only way I would trade it, although it's a headline stock, so I don't encourage anybody to do it, is by selling puts for income, but be prepared to own it temporarily. And if you're ballsy enough to do that, then that's probably the only way I would trade it.
All right, Nick, one more for you here. ETFC, I believe that's E-Trade Financial, banging up at all-time highs here. I know you're going to say not to short it. All-time high is right here, 58.49. Thoughts on EFTC?
Yeah, well, E-Trade, based on the quality of the platform, I would short it, but based on the activity levels and options, I would not, because they bought Trade Monster or whatever Options House or something like that. But the platform is garbage, and to what it was before. But everybody's trading, and trading is up with regards to actual trading rather than investing. So I don't think the fundamentals are bad. It's just pick your entry points, so to speak. I'm not buying calls into this earnings report. I'd rather buy into some other stuff. By the way, Goldman Sachs is it still up? Because I bought calls also into it.
$2.87.
Yeah, I'll take it. So we shall see what happens there.
260. Where are we trading at? We're trading at 260.75. Potential resistance there, 262.5. Pre-market high, 263. We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins the show every Tuesday morning to give us his technical and fundamental outlook on the market. Nick, great as usual. I don't think anybody's going to be mad at me today. I think we covered just about every ticker. Nick, I'll speak to you later on today.
Looking forward to it. Bye.
All right. Boy, oh boy, you take your eye off crude oil here, and if you were thinking of going short through 66, you would have had to have a stop in there. Not sure what the reasons were for it, but went through that old double bottom, now trading at 65.79. Maybe you get a bounce back up there. Not a lot of room in crude as far as support goes. I see 65.
13. You got to go all the way back down to really. I'm looking at the USO.
Yeah, because you're too cheap to pay for futures. 13, yeah, there's a gap in there. But just a quick update on the crude oil market. All right, Dennis, we've got 6 minutes to go, and I saw a lot of ratings in there. We could talk about some of the ratings here during earnings season, not as influential, but let's talk about the ones that caught your attention one at a time.
Yeah, there is a few actually here this morning. And you know what? There's some of these defensive names. So first we go Morgan Stanley chasing price like crazy here. They're upgrading Merck and downgrading Bristol Myers. Where were you 2 days ago here? That would have been the better call because Merck obviously exploded on their data and Bristol Myers got killed. But so they're chasing price on that call. Also, just as a side note, they are upgrading Twitter here as well, just to neutral. Twitter trading up. What do you think, Twitter? Let's talk. We haven't talked it for a few days on the show here. $30 looks resistive to me, though. Is that a word, resistive?
Resistance. I'm thinking that, like, when I write down a plan, like after earnings, that I'm going to stick with the plan because the plan was to buy it when it filled the gap, because there was a double gap in there. But the gap that I was looking at was to 27.08 between 29.71. That was your meaningful gap. And then you went down with all the Facebook stuff. You went down to 26.60. So you filled the gap at 28.25, and they give me another shot at it. So if it got, I'm not sure when they announce earnings, but boy, if I could get this thing a little bit cheaper, anywhere in the 27 handle, that's what I'm comfortable with. Did not sell my long-term position up here just because I didn't want to, and little regret now, but looking to add if it could get back into the $27 handle.
Let's jump over to Newell Rubbermaid catching an upgrade at Wells Fargo. They must watch Mad Money because Kramer was talking about this on Mad Money last night. Wells Fargo comes out with the upgrade today. Nice pop for NWL. And, Kramer is making a case here, and he was wishy-washy on it. At first, he thought he was going to be bullish, and then he's just like, he kind of almost turned like a little bit bearish on it at the end. But
that's not good.
$55 down to 26. He was saying, there is some value here, and I believe there is too. This is one that is on my radar as a, potential. It could be value trap. It's been a value trap all the way down, but 3.39% dividend. There's a lot more value at 26 than there was at 55.
And
They're upgrading it to outperform.
And what was the old symbol on this?
NWL. The old symbol on Newell Rubbermaid. You're trying to catch me in one here. Do you remember?
You should know this one.
Newell Rubbermaid?
Yes. Chat.
What was it?
Come on. This might have been
simple.
This might have been even pre-Dennis. Maybe I
think so. I think you're dating me. I started in 99, so Joel started 87.
What if you just had to guess?
Was it on the NASDAQ or something before?
No,
was it a different one?
It was
three symbols?
Yeah.
New NEW.
No. Come on, there's got to be. Where are some of my old timers in the chat here? Old traders should know this one. I'm going to give you guys.
What was the original symbol? Man, you're stumping us on this one, Joel. I usually get these. I don't know.
RBD.
What?
Yeah.
RBD?
Rubbermaid.
Oh, okay.
Yeah,
that's where to get that from. That's predating me because I don't remember ever trading that. That must have been back in the 80s.
I hope I didn't make this up, but no,
you might have dreamt that up. He does in his older age, Joel. He has these dreams and he gets confused with dreams and reality. So he may have just dreamt that.
Brent, were you around when Rubbermaid was RBD? Oh, come on.
The 35-year-old.
He's the only other 30-year-old in the office here besides Raz, and he's not in this early. So, all right, let's just take a look at Disney, DIS.
House of Mouse.
Yeah, what's going on with the House of Mouse? We haven't talked about that.
Consolidation Station, too. A lot of things in Consolidation Station. Ooh. I don't know what to say. ESPN has problems, but then I went to Disney World there last month. And I've never seen the parks that busy. So I don't know. I've never sat down and really looked at where all the revenue comes from. But I tell you, they make money off that Magic Kingdom.
It is Consolidation Station here. Ahead of the report, if you get a chance at the $100 area, you probably won't, trading at 101.10. Looks like good support, like 100 to 102, man. I mean, I might buy the 104 calls and the 98 puts. Oh, excellent support at 98.2. This was an error. Let's go to a longer term chart here because it just seems like 100's been big. Now going back to the middle of the 2016, it's been a pretty good level. Check your report. Maybe do the Dennis Nick, play the stock ahead of earnings into earnings, and then don't care about earnings at all because you always you already have your trade. Joe C.
Disney upgraded Pivotal, so from sell to hold, but price target still $93, so I still sound bearish.
Joe C. confirmed RBD was ticker before they were acquired.
Okay, so that's what it was.
All right. Closing thoughts here, Dennis. Looking at.
I just want to say I added a new stock to my investment portfolio yesterday. Got a new one in there, Joel.
Yeah, we already discussed it, and
I didn't. When did we discuss it?
You told me last night.
I told you, but I didn't.
Oh no. Go ahead. Go ahead.
So we talked about this, and the reason I bought this stock yesterday was something you said on the show yesterday. In right to the stock. Kraft Heinz gets downgraded yesterday, KHC, to underperform, which is basically a sell at Credit Suisse. And you were saying, and I was looking at this and I was like, you know what? It's been sitting down here for so long. It needs some type of catalyst to take it out. And you were just saying when a stock starts going up on bad news or, stocks starts going up on, a stock, rating that was a sell rating basically, and it closes up. I think it was a reversal day for yesterday. Went down, it tested that $60 level once again, and it had a nice candle. A lot of other your defensive stocks are starting to show life here too. So I went and I bought Kraft Heinz yesterday, threw it in the invest portfolio. I've been watching it for a long time. KHC, 4.06% dividend. Buffett obviously still has a huge stake in it as well. I think it's cheap enough, and I wanted a food stock in there, so I put Kraft Heinz in. I like the candle. It's up a little bit here this morning again. I think you could have a 2-day move, but not only that, I think long term, I like Kraft Heinz.
Okay, S&Ps just off the highs of the session. We did hit 2698.50. We've only backed off 3/4 of a point. Let's see if the street sells in to the open here. Going to be tough to find an area to buy this. Maybe you get a shot at yesterday's high at 2687, that old resistance, new support. But we got a lot of room. We probably, based on the 9-day average range, which is really be coming in, you have a target well into the 2700 handle. All right, Dennis, we're going to let you go. And
well, Joel and I are going to stay on for a few minutes, and we're going to take some ticker questions. So Dennis is going to go, and Joel and I are going to stay on until about 9:10, 9:15. If you have any questions in our chats and you want us to look at some tickers, pop them in there, and we'll take a look. But Dennis, that's it for you. So we'll let you go, and Joel, let's run through some tickers in the chat.
Okay. All right. Let's see if there was any that we missed when Nick was on here. If you guys do have any new ones, throw them in there.
They're throwing them in the YouTube one right now.
They're throwing them in the YouTube one?
So let's start with Sina. Sina.
Okay. The Google chat's just a little bit quicker than the pre-market chat here.
Maybe.
All right. 95.11. Well, that's it's on support. I mean, if you want to own the stock, let's look at a daily chart. That's always my favorite. You held yesterday's low. Yesterday's low was 92.18. You had a step up buyers 93.21. Trading up 11 cents in the pre-market. So you're looking for a swing trade. You definitely have to lean on that 92.18 low. I don't know what the news was for this on Friday and why it went from 98 to 82 on huge volume. So there was some kind of fundamental or technical shift in the market. So you got a lot of air. I mean, is it going back to, 99.66 in a hurry? I wish I could tell you for sure. But leaning on that low, I mean, you could find some intermediate levels in between there. Do you have the news what knocked it down on Friday? No. Also found support in this area, a lot of support in this area, down all the way to $90 going back to July of 2017. So if you want to hold out and, not looking for a swing trade here, maybe want to wait for another dip down. $90 area has a couple significant lows. Let's see here. BZ Tokyo LGFA. And I have do I even have this stock? Let's see here. LGFA is not coming up. Am I doing something wrong?
That could be IGFA. No.
Oh, it could be. My bad. No, that's what I was putting in. All right. We'll do a reset on that one. Boom. IGT. And, this stock has been around for a long time here. It's trading down a nickel. I mean, more gaming, in more states is always good for this, but really like to see a break here above 27. Three highs, 699, 684, and 687. Also a 688 high. So that's a clear breakout here over 27. I think you got some room to run. Not sure what the news that took it off the $30 level, but I like this clearing 27. Coming back on the downside here. If you're looking for a little bit of a lower price today, step up buyers, you have actually 1, 2, 3, 4, 5, 6 higher lows in a row. So step up buyers in here. Let's see what happens at 26.36 if it gets down there. That was yesterday's low.
And he was referring to Lionsgate. So if you do LGF Class A.
Okay.
LGF/A maybe, or .A. I don't know how TOS does, or TradeStation does the different classes, or you can just do LGF.
Okay. Ooh, boy, this is taking, wow, what a haircut here. Did someone say they were going to buy it and change their mind or something? Because 36 down to under $25. Once again, kind of flat here in the pre-market. If I could draw a line on these charts, I would draw a line right here. You have a high at 26.55. And then a couple days ago, you got up to 26.47. A couple other highs here. I wait for this to clear 26.50 with some gusto. You can easily see the 27 handle. 27.17 was a former high, but got to take out 26.50. And I just want to look longer term. Was this 36? Was that? There had to be some kind of merger talk or something going on. Boy, from that all-time high, 36.48, the all-time low. Now I'm going to go to this one. 36 and 25 is 11 and 5.5. I mean, you could easily come up here, get a good rally or some good earnings, and you could easily see this thing floating up to the $30 area. Let's see here. Celgene, SELG. Hanging out. Ooh, this is another one that has a potential breakout. Well, it's already trading up 90 cents here at 91.44. Boy, a bunch of highs at 91. I think we talked about this one before. So instead of chasing it at 91.44, boom. Let's see if it can come. Oh, this is a weekly chart too here. 91 is huge on the daily or weekly. So as long as you stay above that, you got some potential upside here. There's your daily in Celgene. Let's see. What else do we have here? I can't feel my Facebook. He saw some options activity, huge options activity in BHP. I think a Goldman upgrade here. I don't know how this thing moves. To me, 47 is the bogey. 47.07 was your high on March 6th. And then where did you get to? 47.10 yesterday. So holding and clearing 47. That's a good one. I don't see anything at 90. I don't see any resistance in the market here. Not until 3,000 in the S&Ps. No, I'm being facetious here. Nothing at that pre-market high, 99.25 as we're trading. Strict as my numbers are, 2702.75 is a daily resistance level. I have no number there. And then your 321 close has some significance to me because we really fell hard off that level in March. That comes in at 27.1825. So that marks your resistance in the S&Ps. For Hunter 69, a loyal fan of the show, Nutanix, NTNX. Let's take a look at the chart on that one. Nutanix, knock it on the door. Do we got news me on this one, Spencer? Do we have anything on Nutanix?
So I didn't check. Let's see. Nutanix this morning. Oh, not that I'm seeing on the pro, but let me check in PRs.
Light volume here. I see 300 shares traded up here at 54.35. But if you're a breakout trader like Rob Hood, you have a double top here at the 54.40 area, trading at 53.45. I like to see it do it on a little bit more than 500 shares, maybe trading up in sympathy of the market. But like it if it can hold $54, just certainly don't want to see it red at 53.41. Your all-time high, 55.25 if you want a target on that one. But nice march up, a little bit of a pullback. And, man, if you want to draw any projections off this move from 30 to 55, then stock's going to 65 or 70. But you don't want me to get that bullish on you. That will take it down. So, all right. Do we have any news tickers in the other chat? Do you guys do CNET? It's one of those thin ones, isn't it? Low float, thin, kind of high flyer, trading up $1.57. What's the news?
Yeah, this is one of those.
This is one of those.
They had earnings this morning.
Okay.
So yeah, the earnings was a
Chinese net online holding.
A 50-cent loss for the quarter, for 20-cent loss last year. So,
well, they're bending it up, and it's on volume.
Sales were good. Earnings weren't.
Yeah, they liked it. 424. It's trading up on pretty good volume. You want to see continuation to 424 and not look back here. On the daily charts, I got nothing for you until 527. But who knows with this? Okay, $5, nice round number there. Keep an eye on that as a target. For BHP, I can't feel my Facebook. The interest, open interest in the options. Someone bought some calls, but someone sold some calls also to ICF. And also, you don't know what a stock position may be against it. So with the S&P futures going out at the highs of the pre-market session, we're going to wrap things up for today. Good luck, good trading, and thanks for all the questions. We'll see you guys in the AM.